In a volatile market, growth is one thing, but growth driven by acquisitions and consistent profitability is another. So, what kind of things power that strategy? Today, we're looking at how Mullen Group is combining disciplined execution with acquisitions to drive performance, and what that means going forward. I'm joined today by Nick Woodworth, Vice President of Accounting at Mullen Group. Nick, welcome to the watch list.
Thanks, Ricky. Happy to be here.
It's a pleasure to have you back again. So, Nick, you've delivered another quarter of consistent profitability with acquisitions continuing to contribute to growth despite uncertain conditions. From your perspective, what were some of the key highlights from Q1?
Yeah, it was a good start to the year. And like you said, acquisitions continue to drive growth for us. We reported record first quarter revenue, and we were able to hold our margins consistent year over year. Market conditions actually showed some signs of improving, with demand holding steady and the supply side of the market actually tightening in several areas of the trucking and logistics industry. And this is sort of the beauty of our diversified business model. While the Canadian economy continues to be range bound, we did benefit from some improving freight environment in the US. Some of the trucking capacity has actually exited the market due to regulatory enforcement. And we aren't seeing the same regulatory enforcement in Canada, but we are pleased with our Canadian business unit's ability to control costs and operate safely in this environment. Overall, we were really pleased with the quarter.
And Nick, with that combination of profitability and a stronger balance sheet, it looks like you have flexibility to continue executing on that strategy. How does that position the company going forward, and how does it shape your strategic priorities?
Yeah, we do have that flexibility. With $140 million of cash on the balance sheet and $525 million in bank lines, we're positioned for growth. If the market gives us the opportunity to grow organically, then we'll deploy this cash into our existing business units through capital expenditures. But this would require some of the previously announced nation building projects to move forward, or for other private capital to come back to Canada. We'll continue to grow through acquisitions, but we remain very picky as we look for the right strategic fit into our existing network. We don't acquire businesses simply to grow our top line. We prioritize margin over market share. Overall, we're very happy with the position that we're in.
So this is a story of disciplined growth where acquisitions, balance sheet strength, and consistent execution are working together to drive performance in a challenging market. Nick, thank you for your time today.
Thanks, Ricky.
Once again, that is Nick Woodworth, Vice President of Accounting at Mullen Group. For more on the company and its results, visit mullen-group.com. That's all for this episode of The Watchlist. I'm Ricky Lee. Make good choices today.